What is going on, guys? Welcome back to CyberFam. Today I want to address a few of my concerns as to what I think are some of the sort of like issues with Palantir. I think there's a few ones on this list, and I think it's like a list of, let me see here. Yeah, I got a list of 5 things. I kind of boiled it down into 5 things, but there's a few things here that are actually very sort of, it can go both ways. It's either advantages or disadvantages. So without further ado, let's get into it. Really, for me, I think I'm ordering this based on like importance. So the first one I'm going to tell you now is going to be like the least important for me, right? In terms of concern. Now, this addresses things about concern about the company itself, as well as concern about the stock. Okay, so take for it what you will. As usual, this is not investment advice, guys. Like, I'm not trying to advise you of anything. This is just how I look at it. And these are the things that I use to either buy more, buy less, see where the stock price is at, see where the company is at, that kind of stuff. So just keep that in mind. You know, you really should, and I really want to iterate this because lately I think I've been getting a lot of comments. You really should, you know, listen to other people if you want to, but try to really just base together your own reason for buying the stock. Now, if you're just trying to gain information about the company and you're getting people's perspective, different story altogether. But if you're making investment decisions, I really think you should do your own homework. Take what I tell you, take what other people tell you. Tom Nash is a good one. He's a very huge bull. These kind of people, and see if that fits your sort of like, you know, long-term goal and that kind of stuff. And before we get into it, really, like I mentioned before, I'm a super long-term investor. I'm not planning to sell this thing in the next 2-3 years, which is why I'm okay with it going up, down, depending on what the price is on any given day basis, right? So I'm looking at this as a 10-year time horizon. The only time it'll be less is if something drastically changes with what the business offers, or, you know, something like that, okay? Or if one of these things become a bigger problem that I'm going to tell you. All right, cool. So let's get into it. The number one thing, or the first thing I'll mention, sorry, is a dilution of shares. So I know that this is becoming sort of like a thing. A lot of folks mentioned that, oh, like the shares getting diluted like crazy. The reason why it's not that much of a concern to me, the reason why it is a concern to me is because, one, it is happening, right? It's diluting, and this is going to dovetail nicely into another point, the next point actually. But if you guys don't know what I'm talking about, as the company grows, or as the company sort of progresses into, you know, bigger goals and all this stuff, they will issue more stock, right, in the form of stock-based compensation, or, you know, some sort of funding round, or whatever the case is, right? They'll issue more stock towards newer investors or existing investors that want to buy more. Now, what happens is this actually is almost like, you know, printing money, so to speak, right? It increases the amount of stock that's available to go around, right? So it increases that the float, and then what ends up happening is, if you own, let's say, like 1,000 shares, right? Your 1,000 shares are technically worth a lot less because the pool is generally bigger. That's what people are talking about when they mean dilution. So that's kind of a problem because, you know, it's like a double-edged sword, right? It's good because you can onboard more people. If you want to do stock-based comp, you can raise more money. That's always a good thing. But then if you don't spend it right and your growth doesn't outdo the dilution, then you're screwed, right? So like that's exactly the point I'm trying to make here. Now, Palantir, I think, is a super early growth. They're really early in their phase in terms of what they want to do. So it's right now we're at that dicey edge where we're saying, okay, like how much are we diluting every year, and is that matching the for example, earnings per share or something, right? Like I'll give you an example. So Google, I think for a while, was diluting their shares about 1% every year, right? But their EPS, earnings per share, every year was going to about somewhere between like 10 and 13%. So like it was well worth the stock, like well worth buying the stock, right? And this is for stock-based compensation mostly, but actually they didn't do funding, but you know what I mean. So a lot of these going to employees, and they have to vest it, so they basically can't. It doesn't show up until like anywhere between 3 to 5 years, depending on, you know, their compensation plan. So that's number one. 2, I want to get into this thing. This is actually, again, dovetailing into the first point a little bit, but stock-based comp. Now, I'm a strong believer in stock-based comp, but right now, like, and even before the direct listing for Palantir, they were issuing very large shares, and this is why you see a lot of people selling their shares right now, right, for Palantir, because I remember like I applied to Palantir as a job like 4 years ago, and their compensation was pretty good, relatively speaking, compared to where I am, right? But the problem is, for where they were in California, it was actually very low. So what they would do instead is they would issue their employees stock-based comp. So they'll give them a stock option, which they can exercise in 3-5 years or whatever. And that's why you're seeing a lot of sell-off now. Also, Alex Karp is selling some to get some money, right? Now, not just get some money, but also to pay the tax bills for exercising options. But anyway, so this, I think the problem for me here is that as a company grows and as a company progresses, especially software companies, I'm familiar with this, your stock-based comp usually gets less, right? So you get less stock but more pay. So your pay increases like crazy, like Google and all these companies. That's why you hear crazy salaries like $200,000-$300,000. Like I know a guy who used to work in what was it, Amazon, I think. Oh, crap, I can't remember now. But anyway, he worked in one of the fan companies, and his starting salary was like $250,000, and he was telling me some people got like three, in the low threes, right? So it's very high. So and for those people, the stock will be a little less, right? So as the wages go up, the stocks go down. It's kind of a gentle balance that they're trying to achieve there. So I'm hoping that Palantir gets to that ramp where they start paying their folks a little higher and reducing the stock comp, because then it gives us as retail investors a good chance to actually compete with the amount of dilution and amount of appreciation over the long run. So anyway, that's 2. 3 is I just think this is a weird point. It should be ranked a little higher for me, but I think I know why it's ranked a little lower. But the point is the offering that they have, right? The contracts that they sign with these companies, I think they're a little too cheap, to be honest with you. Like let me explain that for a second, okay? I don't know, like we don't exactly know the full deals, right? Sometimes, but for example, I'll just give you an example. Skywise with Airbus, right? One of their biggest clients. They're like, I think their margins, or I think their production or something, Airbus increased by 33%. 33%, right? Which is like crazy. And their contract is in the millions. It's like, I mean, you're saving this company billions of dollars. Like, it's like, and this is like future revenue too. You're saving them future, like billions of dollars. I would assume you would at least get close to $1 billion of a contract, right? This is very indicative of like a growth software company. Like they want to go really low to undercut everybody. But the thing is, and I can't believe I ordered it this way, because again, it dovetails into my next point. But the thing is, they don't have any competitors, okay? So like, you don't have to do that. You can actually charge for your software like a fair amount, and customers will pay it because you really don't have any other option to have this level of integration, right? So I think they should, they can move their prices up a little bit. That'll increase their margins and make things a little more healthy for the returns, right? But anyway, maybe they'll do it in the future. The reason I'm not too worried about it is because, again, this is a platform company. This is not like a product company. So as a platform company, they can always add on more features and ancillary like products that the companies or their vendors, their companies will pay for. So there's a potential for that, right? So we'll see in a few years. Okay, the next point, I alluded to this. They don't have competitors. Now, most of you guys will be like, that's probably a good thing, right? Like, why is that a bad thing? No, okay. So the reason why that's a bad thing is because, especially for software companies, if you don't have the right group of people in your company, you're going to get super stagnant, like super stagnant. I mean, look at Facebook from like a few years ago. They had to acquire a lot of their growth, right? So like Instagram, WhatsApp, and all this other stuff. Like, there was nobody to compete with Facebook. They eviscerated all their competitors in the early 2000s, and then after that, it was basically just them just raking it in, right? So when it came to all these things like TikTok and all this other stuff, Snap for a while was giving them a run for their money. They basically phoned it in. So it's hard to compete when you don't have anyone to compete against, right? You get a little complacent. And I could tell you from a software perspective too. I worked for a company that used to be like probably the best in their business, right? And what ended up happening with those guys was their product just sucked, man. Like we were in like the not the restaurants, but like like the cafeterias. When you go to the cafeterias, you have they have the software that they punch in your food and stuff. So they built that stuff, right? And like they were the best in the business, like in like that group. So their software sucked. I know, because I had to ship some of that. I'm like, man, I can't believe I'm shipping this, right? But they didn't care. They were like, who cares? Like, nobody can compete with us, so we're just going to stay the way we are. I don't think Palantir is like that. Their culture is a little bit different, but I'm just scared that that's potentially there, because honestly, software developers are very lazy, me myself included. We want to do the least effort for the most amount of quality, of course, right? So there's always a risk for that. Anyway, last but not least, and I don't know why nobody else is really talking about this. Maybe, I don't know, maybe it's kind of like a sore topic, but you guys let me know, like, if this is it's gonna offend anybody or whatever. But I'm just telling you my opinion. The last thing is, these guys are only like supporting Western allied companies, right? So Western culture, that kind of stuff. By that I mean, I think Alex Carper said it himself, like basically the US, Japan, the UK, and like basically that block of companies, right? So obviously no China work, no Russia, anybody allied with them, I'm guessing like Turkmenistan and those kind of stuff, right? So here's the problem I see with that. I actually support this, to be honest. I do, like, maybe this is why it's controversial, but there's a lot of things that we do better here. There's a lot of things. There's a reason why over here, if you look at the general culture distribution, there's everyone, right? There's people of all different, races, backgrounds, all that kind of stuff. There's a reason for that. The reason isn't just like money or economy. The reason is because everyone pitches in to develop this sort of culture moving up. Like Alex Karp himself is like, I think a half African American, half Jewish or something. So whatever, right? Like it's like a very multicultural situation that we are all in the Western world. So I understand why he's like, I'm only going to support that because I don't want to be giving such a important software to our like enemies or whatever, right? But the problem is, this leaves, like, if you look at it from a company and an objective sense, this leaves competitors to kind of just slide into the other side. Like, if you take 60% and you're saying, I will refuse to go to take over the 40% or even try to take over the 40%, somebody will just come in and they'll make a subpar product and eat up that entire 40% revenue, right? Like, it's like that easy. So, I think that's a big problem, because then what happens is, if they become really good, they can eventually compete with you, because they won't have the philosophy of saying, oh, we'll only help Eastern Bloc countries or something, right? Like, they might be like, oh, we'll make a different product for Western Bloc countries, and then you got to compete on price and margin and stuff. So that's kind of a dicey game. But those 5 things I think are kind of weird, like, points for me. Like, I'm gonna watch that in the next few years. But I don't know. Let me know what you guys think. If you agree, disagree, let me know with the buttons below, man. And for all the subscribers recently, like, I really appreciate you guys voting with the subscribe button. This is really just, again, my thoughts. It's not like a specific, I'm not telling you to do anything, just the way I think about it. So if you feel indifferent, then let's have a conversation down in the comment section below. I'll catch y'all later. Peace.